Stellantis, one of the biggest names in the automotive world, is making bold and unsettling moves. In a shocking decision, the company has not only shut down major operations, but also cut hundreds of jobs at key facilities. The recent layoffs of 400 workers at a Detroit logistics hub and 1,100 employees at an Ohio Jeep plant signal a deeper crisis. With production scaling back and a shift to third-party operations, is this the beginning of the end for Jeep under Stellantis' leadership?
The automakers are under pressure. The auto industry is in a turmoil, and as you are looking at the results, everybody is going in the same direction. We are under pressure, and to your question about the brands, there is no taboo.
In recent months, Stellantis, one of the world's largest automakers, has been making headlines for its significant layoffs across North America. From the Jeep Gladiator plant in Ohio to a major logistics facility in Detroit, the company has been slashing jobs, raising serious concerns about its future and the broader implications for the automotive industry. The most recent wave of layoffs includes 400 workers from a material logistics facility on Freud Street in Detroit. This decision came as the company plans to transition the facility's operations to a third-party provider starting January 2025. These cuts are indefinite, and affected workers will receive benefits covering 74% of their pay for 1 year. Earlier, Stellantis laid off 1,100 employees at its Jeep Gladiator plant in Ohio. This followed a summer where the company eliminated up to 2,450 unionized jobs due to declining demand and excess inventory. The job cuts reflect Stellantis' struggle to maintain popularity in a market where competition is fierce and consumer demand is shifting. Stellantis' aggressive cost-cutting campaign isn't limited to North America. Globally, the company faces mounting pressure to reduce expenses and invest in EV development to remain competitive. However, its current strategy, which heavily leans on job cuts, may erode employee morale and damage its reputation among consumers and investors. The layoffs also have a broader economic impact, especially in regions like Detroit and Ohio, where the automotive industry is a key employer. The loss of these jobs not only affects the laid-off workers and their families, but also disrupts local economies that rely on the industry. These aren't just numbers on a spreadsheet. These are real people whose lives have been turned upside down. Imagine going to work one day only to find out your job is gone. That's the harsh reality for thousands of workers, and it's just the tip of the iceberg. These layoffs aren't happening in isolation. They're a direct response to Stellantis bleeding cash at an alarming rate. The North American units, previously the center for the company's profits, suffered nearly a 50% loss in just half a year. But it wasn't always like this.
We were again number one in the J.D. Power quality survey, which means that our customers appreciate what our creative people are bringing to the market.
Created in 2021 after Fiat Chrysler merged with France's Group PSA Peugeot, Stellantis quickly became the world's fifth largest automaker. It oversees 14 brands, including Jeep, Dodge, Ram, and Chrysler in the US. Stellantis started strong, riding high on post-pandemic sales and profits in 2023. For a brief moment, it seemed like the merger had paid off. The company achieved record-breaking cash flow and profit margins. But by mid-2024, the situation had taken a nosedive. The company's stock price fell from a high of $29.51 in March 2024 to just above $13 in October, a decline of over 50%. Profits dropped nearly 50% and market share shrank, leaving shareholders disappointed and anxious. This sharp decline in fortunes wasn't just due to global challenges like inflation or supply chain issues. It was also a result of Stellantis' own missteps in North America. Stellantis' North American operations, which were once highly profitable, have become its Achilles heel. Dealers across the U.S. have been vocal about their struggles, claiming poor management decisions have led to declining sales and morale. For instance, Dave Kelleher, a Dodge, Jeep, and Ram dealer in Pennsylvania, highlighted how dealership profits fell from an industry-strong 4.5% in 2020 to less than 1% in 2024. Meanwhile, many smaller dealerships are losing even more money. Inventory issues have also worsened the situation. Dealers are sitting on lots filled with overpriced cars that customers just aren't buying. The average price of vehicles on Stellantis dealer lots is around $60,000, significantly higher than the market average. To move these vehicles, Stellantis has started offering financial incentives, but dealers argue it's too little, too late. One major criticism is Stellantis' decision to cut several popular models from its lineup. Vehicles like the Jeep Cherokee, Jeep Renegade, and Chrysler 300, once key to attracting loyal customers, were discontinued because they weren't seen as profitable enough. The Cherokee, for example, was a mid-sized SUV that used to compete with bestsellers like the Toyota RAV4 and Honda CR-V. Dropping these models has left a gap in Stellantis' offerings, with fewer affordable or mainstream options to bring in new customers. During the pandemic, Stellantis, like many automakers, benefited from limited supply and high demand. With factories shutting down and inventory scarce, dealers raised prices, and customers paid up. Stellantis capitalized on this situation by increasing prices aggressively, even more than its competitors. A Jeep Wrangler, once seen as an affordable adventure vehicle, saw its price skyrocket by over 30%. However, this strategy backfired in the long run. As the economy normalized, customers began seeking better value elsewhere. To make matters worse, Stellantis failed to refresh its product lineup during this time. Many of its vehicles, like the Wagoneer, were priced at luxury levels but didn't deliver the quality or features that consumers expected. Dealers have not held back in criticizing Stellantis' management. In September 2024, members of the company's National Dealer Council sent an open letter accusing management of being out of touch with the challenges dealers face. Many also blame the company's leadership for failing to address long-standing issues in North America. Frequent management changes have only added to the instability. Several high-profile executives, including former Dodge CEO Tim Kuniskis, have left Stellantis in recent years. Dealers argue that these departures reflect a lack of support from the company's leadership, with talented individuals leaving after being unable to execute their ideas effectively. Here's where it gets interesting. Stellantis' CEO, Carlos Tavares, has hinted that Jeep, Dodge, and Ram might be shut down entirely. Yes, you heard it right. These brands, which have been staples of American car culture for decades, are now at risk of disappearing. Why? Because they're simply losing money. Stellantis has a high stock of unsold light vehicles, and it is these three brands that are to blame for it. For those fans of the brands who grew up with these tough and reliable vehicles, it is hard to accept. But Tavares sees that from a business perspective, the only way to survive is by getting rid of them. A single year has seen Jeep sales plummet 20%. And overall, since 2018, the brand's entire sales dropped by a record 34%. As for Dodge and Ram, it didn't go so well, since their sales have also been in a downward spiral. So what's the cause of the decrease? Part of the problem is pricing. For example, Jeep used to be known as a reliable and affordable brand. Now that reputation seems a distant memory. Prices have surged in the past 5 years and are now exorbitant. A Jeep Wrangler that has always been under $40,000 now retails for over $54,000. This is a 50% increase in price and, in effect, drives away a whole class of potential buyers. Jeep's identity crisis is one of the biggest factors in its downfall. First, they tried to sell Jeep as an off-roading all-terrain beast, and now grand models like the Grand Wagoneer are trying to sell Jeep as a luxury car brand. But that's not really what Jeep's core fans want to be seeing. Imagine walking into your favorite burger joint and finding out they've replaced all the burgers with caviar. That's how Jeep loyalists feel. The rugged, adventurous brand they loved had turned into something unrecognizable, and they weren't willing to pay luxury prices for it. They've not only cut off their loyal customers due to this blunder, but also made it easy for other rivals to invade and capture that territory. Ford and Toyota have both had no difficulties promoting where Jeep has failed in maintaining their core values, gaining global attention with their strategies while Stellantis was drowning. As if the sales slump wasn't bad enough, Stellantis is also grappling with a massive quality crisis. The number of vehicles that have been badly manufactured is estimated at over 2.2 million in the last couple of years, and the problems in those vehicles are quite damaging and serious. An engine fire is certainly not minor. Neither are many software bugs that ruin the entire safety of the vehicle. Just think about it for a moment. What would you feel if you bought a brand new Jeep and were told that it could go up in flames all of a sudden? That's a nightmare scenario, and it's eroded customer trust faster than you can say recall. These quality issues have tarnished Jeep's reputation, turning what was once a symbol of reliability into a cautionary tale. In addition to these issues, another sea of controversy surrounds Stellantis, namely its continuous change of people at the top, especially at the Jeep brand. In the last couple of fiscal periods, the company has renewed their top management like it's a game of musical chairs. Which brings us to a point. If you keep changing the captain of a ship, the ship will not move through a storm. This chronic problem of constant change of leadership has translated itself into absence of a well-thought-out effective plan. Because of the lack of a steady hand at the wheel, branding and marketing for Jeep has been served haphazardly. It is therefore not surprising that the brand is having difficulties reclaiming its previous glory. If you're liking the video so far, make sure to subscribe to the channel. It's been reported that Stellantis has approximately 1.4 million unsold vehicles which are currently in stock. That's enough cars to fill every parking lot in Manhattan twice. While the industry average for unsold inventory is about 53 days, Stellantis is at 77 days and climbing. The situation of excess supply of these unsold vehicles is bound to explode in the future. The longer those cars remain parked beneath the sun, the faster the depreciation of the cars will come. In order to get rid of them, Stellantis relies quite heavily on discounting and promotion, which is even worse as their already low profit margins become even lower. In a desperate bid to turn things around, Stellantis is pouring $46 million into electric vehicle EV production. They're revamping 3 Michigan facilities to launch the electric versions of popular models like the Jeep Wagoneer and Ram 1500. On paper, yes, it sounds quite sensible. The world is headed towards the electrical era after all, right? But here's the thing, Stellantis is tardy. While rivals like Tesla and Ford have invested in developing their EVs for some years now, Stellantis is just commencing. When scaling an industry where timing is significant, this could be a critical error. To make matters worse, Tavares is projecting a scenario of electric vehicle warfare. He believes that as many more car makers enter the electric car market, the prices will drop and make any damage to profitability substantial. If that's the case, Stellantis' bet could be the mark that seals their fate. The woes at Stellantis have not only dealt a blow to customer sales and inventory, but they're also spawning a great deal of turmoil among the employees. Grievances have been lodged by nearly 98% of the members of the United Auto Workers UAW on issues such as methods of force reduction and unsafe working environments. The heat has become unbearable, now throttling the maximum tolerance level, with union heads threatening a national strike. If so, it could paralyze Stellantis' operations, aggravating an already miserable financial picture for the company. So, what's next for Stellantis? Bankruptcy is no longer just a whisper, it's a very real possibility. Continuing present trends, it may even be pushed into a Chapter 11 filing, which would give it the avenue of consolidating its debts but could well mark the end of Jeep, Dodge, and Ram models. Alternatively, Stellantis might consider exiting the market entirely or making something of a strategic overhaul, concentrating on maintaining more successful products. In either case, there is going to be a radical shift in the automotive industry. What are the implications of all this on you? You might enjoy some great bargains for a few months as shops try to clear their stock. However, the disappearance of Jeep, Dodge, and Ram in the future may mean that the market for trucks and SUVs will be characterized by less variety and higher price levels. These brands have occupied a prime position in American car culture for generations, and allowing them to disappear would create a space that competitors would surely pose to fill. But let's be honest, no one in their right mind can capture the beauty of a Jeep Wrangler or a Dodge Charger for that matter, especially considering the ruggedness of these brands. The crisis at Stellantis isn't just about cars, it's about people. It's about the workers who've spent their lives building these vehicles, the dealerships trying to stay afloat, and the customers who just want a reliable, affordable car. Stellantis is at a crossroads, and the decisions they make in the coming months will shape the future of the American auto industry. Will they find a way to innovate and adapt, or will they become a cautionary tale of what happens when you lose sight of your roots? Let us know in the comment section below, and make sure to like the video. Thanks for watching.